please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good morning. Welcome to Bazaar Morning Call. I'm Lata and with me are Anuj and Sonia. Sonia, probably the color is wrong today. Probably, just probably. Well, we've seen the dollar kind of quietening down at 95 and most of the Asian currencies seem to be at peace. I have said this before, I think for the third day in a row. And yesterday we saw crude going down by another $1. So the combination is about the best that Indian equity markets can hope for. And the added advantage is that yesterday, the way the markets behaved, it looked like it had put a bottom at 11,400. I mean, the Nifty. So perhaps, there is something in that bottom that it has held for 2 days. The only niggling worry for me is that yesterday, after Indian equity markets closed, the rupee fell further. It was holding on at about 71, 75, but post 3:30, you saw it end towards that 72 mark. So that 71.98 to be precise. So that may be a bit of a worry whether there are still some more sellers than, or more rupee sellers, or rather more dollar buyers than rupee buyers is the only niggling worry. But the way in which the Reserve Bank came in, there may be stability in that market also. So I really want to know if there is a V-shaped recovery.
Okay. Well, give and take everything, this has been a weak week, right? I mean, the Nifty has fallen about 1.5% so far for the week. The mid-caps are down 3% for the week. Yeah. So, and even if you look at all the favored stocks have fallen 5-10% this week, whether it's HUL, Bajaj Finance, Asian Paints, all down 5 to 10%. So let's see how today shapes up. Anuj, morning. You know, it's been a volatile few days. How do you reckon today could shape up? Yesterday you did mention that, you know, it would not be, the risk reward doesn't favor shorting, and that actually played out. I mean, we ended well in the green. But what do you reckon the trajectory could be for today, and how much of a positive would the fall in crude be for the markets? Morning,
Sonia. For all you know, you perhaps might be in right color today. Perhaps not for the opening bell, but for closing bell, perhaps. Look, the risk reward did not favor longs yesterday, shorts yesterday. Made that point. Risk reward does not favor longs today, especially if we have a gap up, because from the lows 2 days back to what you've seen now is essentially a sharp counter trend move which has now played out, and now the market is trading very close to the 20-day moving average. I think today's good trade perhaps would be if we have a gap up at any point, if that starts to get sold into, because the way Asia is reacting, the way currencies have reacted, it's a market which is now a bit of a sell-on rally from positional point of view. There's a range of 11,400 to 11,600. You are now very close to the higher end of the range. So sold into, because the way Asia is reacting, the way currencies have reacted, it's a market which is now a bit of a sell-on rally from positional point of view. There's a range of 11,400 to 11,600. You are now very close to the higher end of the range. So once again, the equation of risk reward comes into place. The point I made yesterday as well, if you look at the FI data, they were playing for a bounce yesterday, but positional short, and that continues. The selling continues in index futures, and after a long time, the FI exposure in index longs is below 50%. There are more shorts than longs. So, and we are at the nascent stage of a series. Crude's decline is, of course, a big positive. Now we are at 76 and change. 2-3 days back, we were at 79. So obviously, that's a big positive. But that's not playing out in the currency market where, you continue to see weakness. That needs to stabilize first. And mid-caps, they are vulnerable to second round of unwinding because we had that big selling. After that, 2 or 3 days of stability. Now perhaps some more unwinding. So again, all boils down to risk reward. And today, perhaps that is slightly in favor of shorts rather than longs.
Okay, no, my guess was not for today. I'm more talking about, say, the medium term or say the near term. It appears that the global currency crisis is kind of, wobbling and then coming to an end. What normally happens after such a crisis is that people would sell off on equities because in all these countries, interest rates would go up. We saw that in India as well. As the currency weakens, you saw the bond yields rising to 8.1. Philippines now is speaking about a much higher inflation. Indonesia already has raised interest rates. So when currency gets weak, obviously all imports are expensive, and therefore, there will be an interest rate hike, and that has to get reflected in equities because the discounting rate, the cost of capital has gone up for all these countries. So there is a near-term weakness, but I think thereafter, at some point, it will become an extremely attractive buy because weak currencies also mean that the local market is protected from imports and therefore the companies should do well. So while there will be some near-term weakness, I think out of this will come probably a very decent rally even for equities.
Okay, and there has been money pouring in, right? The domestic institutions continue to be buyers. Yesterday, DIIs bought more than 600 crores in the cash markets itself. But let's kickstart a bazaar on that note, and let's tell you what our wise experts have to say as we head into trade this morning. Chris Wood of CLSA says greed and fear's base case remains that rising interest rates and continuing Fed balance sheet contraction will sooner or later slow the US economy as signaled by the flattening yield curve. Still, he says the trillion-dollar question for the US dollar and therefore for emerging markets is how long will it take for decelerating trends to become clear? Chris says it may take a while longer, perhaps as long as Q1 2019, and that raises the risk of another US dollar-driven sell-off in Asia and EMs, in which case they will become very cheap indeed. Still, he says greed and fear will continue to recommend an overweight in both Asia and emerging markets.
Okay, well, I can tell you after the comprehensive conversations yesterday with so many economists on the rupee, it's all boiling down to what view you take on the dollar. Whether the dollar will strengthen because US is the only economy that's growing and other economies are actually somewhat weakening compared to a quarter ago. Therefore, will the dollar strengthen? In which case we have trouble in EMs. Or will it be the opposite, that because global trade will weaken and US growth will not result in inflation, the Fed actually does not hike rates as much as expected, and then the pain should be at an end for emerging markets. So there is a big dollar bull versus dollar bear that's playing out in global markets, and answers on emerging markets will depend on that. Let's get you more equity market opinion. This one coming from Sanjeev Prasad of Kotak Institutional Equities. He says global and domestic macros offer little respite. He says India's economy is vulnerable to oil supply shock, but less to ongoing EM ructions. Sanjeev says the rupee probably fairly valued based on current macros, but macro itself is at risk. He adds expensive top-down market valuations. Macro and political uncertainty keeps them cautious.
Okay, and let's get you some money market views because that's where all the action has been, right? Bhaskar Panda of HDFC Bank says EM currencies have been in focus ever since the US Fed started rate hiking schedule, followed by the president's policy of trade war. He says the rupee unfortunately has got bracketed with most of the worst performing EM currencies despite better fundamentals. Higher crude prices didn't help either. Bhaskar says breaking 72 to the dollar was a formality yesterday, but he adds we might see the dollar INR get back some sanity today as the pair is expected to consolidate within a range of 71.90 to 72.15 for the day.
Yes, that has been the prayer, that it should, kind of consolidate around the 72 mark. Now, this is Bhaskar Panda on the Indian benchmark bond yields. He says yields remain elevated. He expects the 10-year benchmark bond yield to trade in a range of 8 to 8.1 for the day.
Okay, over to Rima then for the world view.
Hi guys, the story in the US market is the continuation of the sell-off in the tech stock on worries of trade as well as tighter regulation. So Nasdaq is down for the third day in a row, losing about 2.5% in this period. At the same time, the Dow and the S&P 500 were largely on the flatter side. With respect to the US economic data, ISM data was strong, but the ADP jobs data was a bit disappointing, and that puts the spotlight on the non-farm payroll data out from the US later tonight. Europe also continues to see a sell-off. They're down about 3 to 3.5% this entire week. Yesterday as well, almost down close to about 1%. amid trade concerns as well as emerging market weakness. In the emerging market basket, you've got Russia, which was under pressure today, and so was the Philippines index. But the Turkey index managed to close pretty much flat. In the Asian market basket, you've got Nikkei, which is under pressure. There is an article from Wall Street Journal where they've indicated that the US president has hinted to their columnists that Japan could possibly be the next trade target. So this is after Canada, Mexico, the European partners, as well as China. Maybe it could be Japan next. The US tariff, wars threat continues to loom over the rest of the Asian markets. No big sell-off. It's only the the Singaporean markets which are under pressure, while the Chinese markets have rebounded. The dollar index has retraced a tad bit from yesterday's level, hovering around the 95 mark. The big positive for the Indian markets has been the decline in crude prices overnight, and the SGX Nifty is suggesting a slightly positive start.
Okay, yes, we can see that green, though it's mild. Thank you very much, Rima, for that. And here's more of global opinion that we haven't got in quite some time. The ongoing US-China trade war could see an escalation today amid already tense relations between the two economic powerhouses, following reports which said the Trump administration could place tariffs on additional $200 billion worth of Chinese goods as soon as the public comment period ends in a few hours from now, actually. China's Commerce Ministry has said the country would retaliate if the US imposes new tariffs. And the opinion I was speaking about is from Stephen Roach of Yale University. Remember, the old Morgan Stanley hand.
The idea that this is a one-sided relationship where China has more at risk than the U.S. Is certainly at odds with a book I wrote a few years ago, and it's actually at odds with something that Neil wrote a number of years ago when he spoke eloquently of a concept called Chimerica, where both countries are joined at the hip. So it's not clear to me, where he's coming from. The U.S. depends on China for low-cost goods to make ends meet for budget-constrained American consumers. It depends on China to loan us surplus saving, which we're going to need more of given our budget deficits over the next few years. So the idea that this is a one-way street that the U.S. should take advantage of, I think, is wide of the mark. In the next few hours, it's probably going to up the ante on tariffs. Whether he goes the full $200 billion or not initially remains to be seen, but certainly I think a significant escalation will occur. But the president is cornered right now politically, and his MO, when he's cornered, is to do something large on another front to deflect attention. So the tariffs make sense from that point of view. This isn't about trade. It's about a more strategic battle between the U.S. and China over things like innovation and technology. That's going to be a much, much tougher slog for the Trump administration to tackle. My view on the dollar, given our chronic current account deficit, which is going to go from bad to worse, given the shortfall of domestic saving that's likely over the next few years because of Trump tax cuts, the dollar is going to be moving lower over the next several years. But whether that starts, tonight or next year or the year after, I have no idea. But in a large current account environment for any country, even though the U.S. is the world's reserve currency, the direction of the currency is usually lower. And that's been the case for the dollar corrections we've seen repeatedly over the last 30 years.
All right, it's been a disappointing week for the bulls overall. The Nifty is down about 1.5% this week. But this morning, the SGX Nifty is showing some signs of stability. Even across the Asian markets, some of the markets like Hong Kong, Shanghai, etc. are trading in the green. So let's see how the things shape up. Our research team is here to give you the list of top 10 stocks to watch as we head into trade this morning. Anuj, what are you looking at today?
So one large cap, one mid cap. Sonia, Hexaware, showed some signs of resuming its run. It's retraced almost 1/3 of its correction. So perhaps it's possible to see almost, half of the correction being retraced. So that's something I would want to watch out for. And the other is Mahindra and Mahindra. It's corrected about 5% in a rather swift manner after those tractor sales numbers. Again, showing signs of bottoming out, trading near the 50-day moving average, but below the 20-day moving average. So technically also poised for a bit of a bounce. So let's see if the bounce comes or not.
Hexaware, you expect it to bounce?
Yes.
You expect it to rise?
Yes.
because of the correction. Okay. Well, I think the big stock this morning will be Sun Pharma. Ekta, cut through all the jargon and tell us the observations that came on the Halol plant. Do they leave a Sun Pharma investor happier or sadder?
Well, sadder definitely, Lata, because the ideal outcome would have been no observations or minimal type of observations to solve. But 6 observations have been issued to the Halol facility. Remember, it is majority of their filings which are from the Halol facility. Plus, it also comes right a few months after they had solved the issues as well, and the warning letter was in fact lifted, plus they had received an approval from that particular facility. So according to analysts, maybe the first 2 observations look more critical to solve, especially because it is an injectable facility. So you can definitely expect red on the stock. Because there will be uncertainty now in terms of whether new approvals will be stalled and how exactly Sun will be able to remediate these observations.
Okay, red on the stock, and Sun has been one of the big movers over the past few months. I mean, this year it's already given you 20% returns, so perhaps some of that could come off given this uncertainty. Thanks, Ekta, for that. Bajaj Auto could be in the green this morning. That's because there's some positive news that has come through. Yesterday, Nitin Gadkari at the SIAM convention said that the government will now exempt all electric vehicles and alternative fuel automobiles from any permit requirements. So it will be a no permit regime for auto rickshaws that are powered by alternate fuel. And as we know, Bajaj Auto is the market leader in this space. They have an 86% market share in alternate fuel three-wheelers. Now, post this announcement, Bajaj Auto has decided to expand their three-wheeler and quadricycle capacity by 25% to 1 million per year, because they are expecting higher sales, as now there will be no permits on any of the auto rickshaws powered by alternate fuel. Remember, the demand for three-wheelers in any case has surged quite a bit because permits were released in many states like Maharashtra, Karnataka, Andhra Pradesh and Delhi. Axis Cap has raised their target price to 3473 on Bajaj Auto. They say that domestic three-wheelers account for 10% of Bajaj Auto's volumes and almost 20% of EBITDA. And they've raised their three-wheeler growth estimates as well after forecasting higher volumes.
Okay. Well, that's going to be something for, generally the auto sector, which has not been the vanguard of the rally in the last few weeks. Ekta, Oro Pharma?
Well, I expect further green on the stock after yesterday's rally. They held a conference call last evening and they have said that, the product that they will acquire will help them enter into the authorized generic space, and it will see some amount of price erosion, but the street seems to be happy with the financials of this particular transaction. So, for example, Credit Suisse has hiked the target price to 800, and I think Motilal Oswal has hiked it to over 900 rupees as well.
Okay. Yes, it was in the green yesterday, of course, by 9%.
Well, a lot of acquisitions, right? First Oro Pharma and then L&T Tech. Rima will tell us more. Rima?
Hi, Sonia. Thanks so much for that. Well, they've acquired a semiconductor company. It's called Graphene. The total deal value is 93 crore rupees, of which 70 crore will be paid up front. Now, Graphene had revenues of about 66.5 crore rupees. So it's a small company. It's a startup. So that's the reason why its growth in the last few years has been very strong, a 57% revenue CAGR in the last 3 financial years. This acquisition will boost L&T Technology's semiconductor offerings as well as provide cross-selling opportunities. Axis Capital says the acquisition will be earnings accretive. So net-net, it's a small acquisition but appears to be a good one for L&T Technology. The stock has done very well, up 70% so far in 2018, up 123% in the last 1 year.
Okay, Rima, thanks a lot for that. Of course, Ritu has some fresh information on the power companies. Ritu?
That's right. Many of the stressed power companies identified by State Bank of India under Samadhan and outside, all of them are now set to be referred to NCLT, because for most of these cases, even though banks try to find resolutions outside, not all bankers are on board, and you require unanimity in their decision for the resolution to be really passed through. That said, the 27th August deadline had anyway expired, and this was only something that banks were hoping RBI would give them relief on if they were able to find solutions before the 11th of September. Then that has not been the case. So, if you're talking about KSK Mahanadi, Jhabua Power, GMR, Coastal Energy, all of these are now set to be referred, including Prayagraj Power, where bankers tried to sell the asset to Tata Power as well as JSW, but at the last minute, resolution proposals have not been accepted by all the bankers. Therefore, all of these, at least bankers have been advised so far, will have to be sent to NCLT for resolution if they are to comply with the RBI circular.
Okay, well, this is looking like a bit of a jar both for the banks as well as, I mean, it's 1.8 lakh crore of power companies. If all of them go to the NCLT, then there is a bit of readjustments of provisioning that perhaps analysts will have to do. Also, yesterday, IDBI filed took Reliance Naval to the NCLT.
Exactly. Yes, Reliance Naval is also one of the companies that got impacted by the Feb 12 circular, and given that there was no resolution on the table by the time the 180-day deadline ended, that company has also now been referred to the NCLT. But there is still a ray of hope for Anil Ambani. What the lenders have said is, if they offer a revised one-time settlement proposal to the lenders, even after the company is taken to NCLT, if 90% of the lenders agree to keep it out of NCLT and accept that plan, it could be withdrawn. But that said, the current offer includes, about 1,000 crore rupees of cash repayment to lenders upfront, another 300 crore rupees as other repayments to other operating creditors. There is also 1,350 crores of guarantee that the promoters will shift from Reliance Naval into Reliance Infra. That said, the remaining part of the debt will be converted into debt, into equity and CRPS. But this proposal was not really acceptable to lenders, so they are hoping that within the 10 days' time that they've given to Reliance Naval, there will be a revised offer.
Okay. Well, thanks a lot for that. A CRPS is compulsory redeemable preference shares. Preference shares usually mean I'll give you 6,000 crores 15 years later or 10 years later as, say 5,000 crores. No increase. The preference interest is usually 0.01%. So basically it's a haircut, but you don't call it by that name. You just call it preference shares. Clearly, lenders will not be happy with that kind of offer.
Okay, well, Reliance Naval, in any case, is almost a penny stock now, 16 rupees there. But Sonal is also with us to tell us about some stocks that are in the news. Sonal, what do you have for us?
Good morning, Sonia. Well, I have a couple of stocks and all of them have positive news flow for them. I'll start with Welspun Corp. Well, the company has entered into an agreement for supplying 220 kilometric tons of pipes for an oil and gas project in America. After this, the order book stands at around 15,000 crore rupees. Expect that stock to do well. Phoenix Mills will also be in focus because one of the associate companies, for them, India Ratings has increased, has upgraded the rating. That is because of the higher lease rentals that particular mall is getting. Shankara Building Products also should do well because CRISIL has upgraded the ratings for the company. Sakuma Exports will also be in focus because the board of directors will be meeting on 14th of September to consider share split and also raise funds via QIP. United Spirits is one stock that I'm watching out for because SEBI has issued an order where they say that the Diageo group does not have to make an open offer for the company. It was alleged in a show cause notice that was issued last year in May, which said that now Diageo will have to make an open offer. So that was an overhang, but now that has been removed. Back to you.
Okay, thanks a lot for that. Well, here's a quick recap of our top stocks. Stocks with positive news flow: Hexaware, M&M, Bajaj Auto, Aurobindo Pharma, L&T Tech, Welspun Corp, Phoenix Mills, Shankara Building, Sakuma Exports and United Spirits. While stocks with negative news flow: Sun Pharma, Spark, Reliance Naval, GMR Infra, JP Power, SBI and IDBI Bank. But there are plenty of brokerages as well that we have for you this morning. Mangalam is here to give us the complete lowdown. Mangalam, hi, good morning.
Good morning, Sonia. A lot of brokerages. So we start with Hindustan Unilever. Macquarie has written after the recent underperformance of that stock. They say that consumer demands continue to remain strong, led by improvement in the rural markets. The street, they say, is underappreciating the cost-saving initiatives and the margin impact. They maintain Hindustan Unilever as their top pick, maintain their outperform rating with a target of 1870 rupees. Jefferies has written on consumer finance companies. They say Bajaj Finance and M&M Finance remain their top picks. They prefer asset financiers to housing financiers, but if they must, PNB Housing Finance is the one that stacks up favorably versus peers in terms of loan sourcing productivity. So within the housing finance companies, they prefer PNB Housing Finance. As far as the IT companies are concerned, Nomura has written a note this morning, and they say that the Indian Tier 1 IT companies, they've been losing market shares to a lot of these MNCs, and FY19 guidance suggests a weaker year. So this is something we have to watch out for. Infosys Infosys, they believe, is likely to grow in the near end or lower end of their guidance. Wipro expected to grow in low single digits. The only exception in this whole space would be TCS, where they can expect growth to accelerate in FY19. Axis Cap has written on Crompton Consumer. They have upgraded that stock to buy with a target of 243 rupees because this stock trades at a 15% discount to Havells. HSBC has written on Nalco. They have a buy call with a 90 rupees share price. And finally, we have PVR and Inox Leisure. HSBC writes on them. They maintain their positive stance on both these companies despite earnings cut, which is imminent after the FNB.
Okay, Mangalam, thanks a lot for that. We had news, of course, on Aurobindo Pharma, that acquisition. It was the top gainer yesterday. Here's the big bull, Rakesh Jhunjhunwala, quizzing the management in the conference call.
Suppose certain part of the business has to be disinvested. How do you adjust the price?
I mean, I think that particular carved out entity, you will have to evaluate in terms of like the portfolio as well as the various business aspects, and then we'll evaluate based on that. Is that right, Saumya?
Yeah, if you're talking about the purchase price, so anything that's an income out of what we have acquired, that would be an adjustment for the purpose of purchase price allocation for tax purposes. One question is that if some part of the business is disinvested, how do you adjust the price consideration? So anything that we pay to make an acquisition, after that, post that, or during the course of acquisition, if we get any credits back, for example, like the one you said, would be adjusted in the purchase price internally. As far as the seller is concerned, it doesn't make a difference. But as far as we are concerned, we would make a purchase price adjustment to that extent, because to that extent, we are giving up the asset. Right, how do you determine? It will be determined at the price at which it is disinvested. That means the seller is getting 900 million. Whatever is to be disinvested is on our account. Am I right?
So typically what we would do is we would have a valuation firm, a third-party valuation firm, determine some of these values. So it goes into a altogether different math. And then we determine the price based on certain cash flows that are likely to be generated and allocate the price.